High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading workshop webinar today. So today we are going to be looking at, for those of you joining in new for the first time, we're going to be taking a look at the format in which we take a look at some live trading potential trades. In the morning we did see some GBP USD trades which has really taken off. I saw this at about 10 a.m. I was talking to one of the clients about the open equity. Left than that, after that it's been soaring down, okay, really been tanking. Another one that we are taking a look at is gold. I was just analyzing it just before the live trading webinar was about to start. I did take a look at DAX as well, so a lot in store over here on live trading potential trades, and we'll take a look at some of the principles that we look at that you can apply on any strategy that you are doing. Okay, the second thing we'll look at is usually we'll look at a topic for the day. And the topic for today, what we're going to be talking about is how looking at different markets can boost your trading performance success. Okay, so we will take a look at that as well. And then finally, we take a look at some upcoming events and got some great updates on the ETM Summit as well. And then also some Q&A, right, where we open up the floor and we take in some questions. So this and more in this live trading workshop. Hello traders, for those of you joining in new for the first time, this is Napan here, founder of Master the Markets Illustrates Conference and the Traders Open Day. So traders, I'm just taking a look now before we don't want to miss the trade. So I will quickly take a look at gold trade that is happening at the moment. So what I was taking a look at is this one here. I did take a look at, I'll just put all the time frame correlation. I've done that just now. I'll go through it in a minute once I've placed this order. Range lines, I'm just taking a look. Range lines, the latest was upper range 8 a.m. That's right, and that was just a small breakout. In terms of this one, there is NA, the ratio there is NA. And in terms of previous daily high and low as well as NA, isn't it? So what we would do in this case, it's not the best of setups, and that's a downtrend phase 2 at the moment as well. So what I will do, let me just see in terms of risk management. So what we will do is we'll take it at a 0.5% risk because it's not the best setup I'm getting, a setup. So what I will do is I will do in this way here. I'm just doing some risk management. Just give me some moment. I'm just using this calculator here. And what I'm looking at is, yeah, 6.57, isn't it? That's on the gold, right? So that's on 0.65. We're going to be taking a look at coming in at this point here. So that's what I'm going to be taking a look at. So let me see. So 0.65. I'm just going to quickly just take a look at this. Buy stop. Sometimes your gold, you got to be a bit fast, isn't it? Not traders. So 377, 1.50, and then I'm taking a look at 3763.90 and 3775. 0.84. So I will do this in a minute very shortly. Yeah, so I think more or less we got everything right. So let me go through this trade at the moment, what I'm looking at. I just looked at the direction bias of going long, and I'm taking a look at an entry to go long as it takes out this high here after the small retracement on the 15-minute, okay, towards the long side. And over here, what we are taking a look at also is, if you take a look on the high, 3771.42, that wave, let me just put the order ticket here. I'm just going to take a look at the spread. So that's about, let me see. So that's about 30-cent spread, isn't it? Is what it's got over here. It's got a 30-cent spread. It's quite tight. So I might need to adjust this a little bit. So 377 1.42, so 3771 72, 3771.80 is what we can take a look at. So let me just adjust that very quickly. 3771.80 is what I will take a look at the moment. Okay. Right, so I've done that over here. Those of you looking at that, so I've done that. 3771.80 is what I am taking a look at over here, accounting for spreads as well. And then my stop is going to be for the low of this, around here, 3763.72. We can start to take a look at another target. Let me see. So C7 3763.90 actually is the one that I went for. So I'll just adjust this here so that you guys can see that. I'll explain in a minute why I'm doing all of this. And then the target, I've put it for 1 ATR number as it takes out this high over here, okay? 3771.42 plus 434, okay, is what we are looking at. So here, 3771.42 plus this number here, the 1 ATR number, just take it at 4, just to average it out. So it comes to 3775.42 is what I've got. 0.42, isn't it? We can keep it at 42. Yeah, keep it exact. And I'll just change that very quickly here, traders. So 3775.42 is what I've got. And there we go. So I've done that over here. So what I will also do is I'll push this out on the Telegram channel. And then after I've done that, I'll start to explain the whole rationale behind this, why we took this trade. Remember that, as I've always said before, our main thing, traders, is not just to tell you the signal, but also why we are particularly taking the trade as well, okay? What's the reasoning behind it? So I will explain behind that so that, you know, we just don't throw you the fish, right? So that you also understand how to fish using these principles, okay? So 3771.50, no, that's not the correct one really, isn't it? What did we do over here? Let me just copy it from here. 3771.80 is what I am taking a look at. Then I am taking a look at 3763.90 as stop loss and 3775.42 as our target. Okay, so that's what we are taking a look at over here. Good. So I've got all that sent out on the Telegram as a buy order. So that's what we'll be taking a look at. Now, in terms of if this does go short, we will take a look at this number here being taken out at 3763.90, and then we will reassess that. But highly probably I'll be taking a look at only long because of the correlation of the trades on the higher time frames. Okay, so we'll wait and see how this plans out to be. We'll wait for the market to come to us. So to give you an understanding, what we have done over here as I'm going through this, so let me maybe show it to you on here, on the gold chart here. On trading is a bit more easier because we got all the indicators on here. Just for execution, I just used the MetaTrader. Now let me show you over here, right? So we'll take it step by step. So the first thing what we do, traders, because we have our tops and bottoms all quantified here, we have all our trends in a structured framework across different time frames. Okay, so that's the first thing what we got, the first data point. Now, let me just bring up this one as well for you guys so it's more easier. So I've got this one here as well. So across all the different time frames, so this is what we do. So over here, I'll give you some reference links later. So you see on the daily time frame, right? So we correlate all the trends first. And the reason why all the trends is not subjective anymore, because what we did with the work of the quant traders back from the 1960s, which also references the work of Richard Wyckoff, right, on the volume spread analysis, which then got more popularized by Tom Williams, and then now Gavin Holmes and his team at Trade Guider are superheading it, right? Spearheading it. Now, we also partnered with the Trade Guider team because what we got here is more of a quantified structure, and that combined with volume becomes very powerful. So the whole point over here is that once you got your tops and bottoms quantified, so you see the top signified by a dot here, that's when the top gets confirmed according to our formulas in the framework, which was found in the 1960s. Here, over here on the bottom, that's where the bottom gets confirmed, okay, over here. Now, on a swing trading perspective, this absolutely makes sense because you can see and this particular swing, that is a great swing move currently that we are riding on the gold trade over here. Okay, we did look at this trade as well on a longer term strategy as well, okay, on the swing. Now over here, in terms of the other ones, it's just measuring the swing distances, okay, of each one once I've locked in my point of entry, okay, the maximum point reached. So that's what we got over here on the daily. So once you got your bottom and tops quantified according to this orange dots and blue dots, I can then convert this into a line diagram, right, traders? And I can quickly suss out my first data point that I can get from this market structure framework over here, okay, which is basically this, is it not, right? So it's compressing after that and it's bursting out, took that out. It's an uptrend at the moment, okay. We've coded all the different 6 variations for a trend, okay. And in terms of phases as well, at the moment this is a phase 1, okay, that you can see over here, and that's what we got over here, okay. That's in alignment with the trend. Now the other thing that we can also see over here, that on the 4-hour, so on the daily we got the uptrend, we got the phase 1. On the 4-hour we got another one, uptrend as well, and then on the 1-hour time frame as well, we've got a uptrend as well, okay. If you were to see that, once that populates it, you can see that over here. Actually, on the 1-hour, it was an SMC down, I believe. It was a single market compression to the downside, if I'm not wrong. Let's check on here what it's doing. There we go, right? So if you see over here, what I'm saying is on this perspective over here, you can see this is a single market compression. So if I were to draw that into a line diagram, right? So there we go. So that's a lower high compared to that, and that's a higher low compared to that. So we don't have a trend, so it's in compression, but the last swing that was confirmed was a top. So this is a single market compression to the downside. Okay, so that's what we got over here. Until it shows signs of keep taking out the levels to go to the top side, then we won't take that trade. So that's why we align all the time frames together. Okay, so this is on the 1 hour time frame. So let me keep that there, and then on the 15-minute, you can see over here, traders, right? On the 15-minute, you can see that this is bouncing up a bit more higher over here, right? As you can see. So that's towards the uptrend, and that's towards the phase 1 over here. So once I've got all the trends and the phases correlated across all the different time frames in a quantified structured framework, I put that all into this table, right? And the purpose of this is, as I've mentioned before, is towards a direction bias. So I've got the daily and the 4-hour uptrend, a 1 hour towards the downside, and the 15-minute is a downtrend phase 2, still pointing to the upside, okay? So that's what I've got. So then, before I formulate my direction bias yet, I look at a 4 more factors still, okay? And the other factors that I also take a look at is towards basically the stretch principle, right? So what I take a look at over here is that in terms of these principles, let me just see whether it's taken a 3 cents and 1. I think we should have had a trigger at the moment. Let me see if we did get a trigger. I'll keep an eye on that one. Yes, we did get a trigger on that, so we'll see how that plans out to be. Did it go, did it take that out? Let me see. Yep, it did take it out, so we're good and safe. So we'll wait and see how that plans out to be. Now, before I take a look at further things, now the other thing I also take a look at why we took a long on this particular trade was that in terms of the stretch principles, which I'll give you some reference links later, it took out the upper stretch also, okay? It took out the lower stretch, which is the red line, and took out the upper stretch as well. One quick note I must do say that all these indicators that you're seeing, including the smart money indicator with all the stats and everything, all was programmed by our community, okay? So clients like yourself who are watching a live stream find this fascinating, very structured, very systematic, and then they come and join us, and then they say, you know, I want to code for you, Tiru, I want to improve this thing. And that's how we got most of it. You know, the clients themselves, community itself uplifts itself, you know. So really good to know that we're going on the right way over here. So the other thing, what you can see is that it's taken out the lower stretch, and then it's taken out the upper stretch as well. So that's another clue for the direction to the upside. In terms of range lines, as I saw that it was also towards a little bit to the upside, the ratio and the previous daily high and low, they were not giving any true signals over there. And in terms of ATR range, it hasn't done its ATR range as well, okay? So this is what we got at the moment. So you see, when I put all of this together, so I got about 8 factors to determine my direction bias. You can formulate something very similar as well. And I've got 3 of them aligning to my direction, actually 5 of them, right, across the 8, okay? So a little bit more than the 50% mark, and that's why before I just jump into a long trade, I also then mark out the levels where I want to take this long. Not only that, it's not one of my best setups, as I said, so therefore I reduce the risk as well to about 0.5%. So this is what we got at the moment, traders. So then what we then represently then we do is we got so a little bit in profit at the moment. Those of you on Telegram channel, you'll be observing that. I think even on here, when I take a look, it should be a little bit in profit, tiny one over here, which is what we are managing at the moment, okay? So I'll wait and see how that plans out to be. So diagrammatically, I also take a look at the volume as well. So if you take a look at the volume over here, there was a small spike over there, which came through around this bar over here, okay? So if I were to do that, so you can see around this bar, right? The volume spike. But of course, as Gavin and I, we always will say that be like a detective. Now, what was the volume towards, right? It came on this buyer bar, but the next bar then closed a little bit low, but still springed up a little bit. After that, you had buying consecutively. So that tells me that the volume around there, the accumulation, was towards more confirming towards the upside. Okay, so that's the first thing. Now, then the other thing also, then we take a look at traders is that if I want to just show you where we are looking to get in, I wanted it to clear this area, right, after it sold off, to come back in just to give me some more strength that the buying pressure is still strong. Okay, so that's what it has done at the moment. And then after that, then we got the selling the stop over here, because that was the last place that it came back to. So let's see if it sustains or not. Sometimes at the US session, when it comes, then it won't sustain its buying pressure, so we got to keep an eye on that, to be honest. And then after that, then in terms of target, we've put it on 1 ATR level, which is around, let me see, which is around 3775, is it not, traders, right? So that's what we have taken a look at, 377, 5.80.52. Okay, is what we are taking a look at. So around here, so that's what we're looking at. Now, if you want a bit more larger targets to take a look at, so then what we can be looking at is basically for the range to be fulfilled for today. Okay, so let me show you that one. So 80%, that's about $32, right? So if I plus that to the low of today, 3750, that is about 3782. Okay, $3782 would be our level that we'll be looking at, 3782. Okay, that's another target over there. So if I were to put that onto the charts here, one is take out the high of today, that's one, okay, on here, 3779, and the other one is the range, which will be 3782. Okay, that's what we will be taking a look at. Great. Okay, good. So I've given all the whole premise of why we took this trade. As you can see, there was trend alignment here, direction alignment, 5 out of 8 factors being fulfilled on the stretch principle. Okay, and then the other thing what we did, okay, that we took for direction bias, timing wise, we waited for this clearance of this retracement. And then the other thing that we also did is because it was not one of our best setups, risk management wise, we reduced the risk. And then the final thing, then we also are taking a look at, as I mentioned before, was the stretch principle as well. Okay, so that's what we did. So we did the direction, and then also in terms of timing, we waited for it to clear this area before we started to get in. Okay, so those are the things that we looked at in terms of the gold trade. So I'll wait for this to carry on and see how this goes. Let me just quickly just see in there's a bit of news in Forex Factory. 3 p.m. Not really anything big. I think President Trump, yeah, not much. So let's see if just the open of the US gives it a bit more stronger volume and carry through or not. We got a gray dot on the VSA light, which is also okay. Volume is a bit supporting, not the best. But anyway, we'll see how this carries on to be on there. And the 1 hour, so far so good. We'll see if this one goes on to confirm at the end of the hour as well. Okay, we've got a little bit of volume on here. So we'll see how that plays out to be as well. Good, so that's on the gold chart. Now, quite a lot of you are pressing me on the terminologies, right? So we talked a lot about the stretch principle, the volume, and all of that, and the trend alignment direction, and the smart money framework, and everything. So what I'll do right now is I will start to take a look at and give you some reference links, okay, that you guys can start to take a look at. So one of the things that you guys can take a look at, traders, is the 7steps to ctp.com, okay, link. So over here, this will give you the entire understanding of the smart money framework and everything. So for example, even when you take a look at any instrument, right, I can get the stats for the instrument, let's say on GBP/USD, right, where to place the target and everything on basically over here. So when I do OE stats over here, this would tell me in terms of number of pips or whatever time frame I'm looking at, even on the 1 hour time frame, 15-minute time frame, whatever that it may be, I can quickly see what is the distance that it can go to in terms of a probability basis. Okay, so that's what I will be able to look at. So if you see over here, that is taking a bit of time. Let me see if I can just reload that back once more, or maybe I can use this one here in terms of this one. Okay, let me do that. Actually, I can show you that on a higher time frame also. The principle is the same. Even on the 4 hour, we got it as well. So over here, you can take a look that you can see that whenever the dot comes true, right, you can see if you want to take it to, let's say, 15 pips, right, from the dot, okay, you see there's an 80% chance of it getting there. Now you're trading based on probabilities, you see. That's the whole premise of this type of trading. Now, in terms of a larger distance, right, if you want to take it a bit more to 60 pips or whatever, that's a 50% chance. And if you want to take it much more larger, then a 30% chance. Now, how do you know which one is going to run a bit more? And that's where you need to use selection. And that's where we use all the volume spikes and everything, and the volume correlations and the price action. You can use Fibonacci, stochastic, name it. You can put anything on this framework just to see if it is going to correlate or not. All right, so that's what we'll be taking a look at. I'm just going to keep an eye on the gold. It just opened just now. So the pressure is towards the downside. So I'm going to just see if we can cap our, minimize our loss or not on this. Is that an outsider bar at the moment? Not really. I mean, another good place to come back in on this trade would be when it takes out the high over there. It did just take out the upper stretch over here, but after that it has fallen back. We need to still give it some room to breathe. Let me see very quickly on the 5-minute time frame if there is something else that is signaling. See, this is another one that we can take a look at. Maybe we might have to quickly cut the loss on this. But you know what? We have to wait until we have to be disciplined towards this in terms of the 15 minutes confirming, or if we do not get it, I think it might just seep through the stop for now. Okay, so yeah, we can't really do much on this one because we've seen places up. So that's gone through that. Now you see, when it's gone through there, don't be, the most important thing is not to get disheartened. The most important thing is to reanalyze this and see if the market is looking to reverse back, and you need to reverse your position, but don't jump into it. That's the most important point over here that you definitely got to take a look at. So let me see on this one over here. Are we getting a signal to the downside? If it does got to do it, I think we got to take a look at quite a few points altogether. So you see, we can't jump onto this, you see, traders. That's the issue with this. I'm not getting a good hit on this because it's stuck in between the upper range and the lower range. I think I'll stay out of this for now. If anything, if it does come back, I think we will take a look at this high being taken out. I think that's the only thing we can take a look at. Okay, I won't be able to take a look at anything else. Now, the 1 hour, in terms of its range, I would say the first level, if it does reverse, would be for this low to be taken out, 3759. So keep an eye on this. We won't take another position on this yet. But you know, some days it's like that. Remember, we are running a probability game, right? That's why in these live streams, we take a win and a loss in real time, okay? There's no hiding. And you've seen also in gold, you know, when we have run trades like this, it will come very near to the stop and then it will reverse and then zoom to our target, okay? So we can't really hide away from that. We just got to stick to our rules, which has got an edge in the long run. That's why the most important thing in this game is the consistent execution. Okay, good traders. So you saw the reasoning and how we manage that trade and how we are waiting for another signal. So I will wait and see whether we do get another signal on that or not. Towards the long side, I'm not going to jump into the short just because it stopped us out towards the opposite side. Now, in terms of, as I was talking about, in terms of the targets, right? As you can see, all this table tells you that. Now, even more powerful is the MAE table. Now, the MAE table will tell you where to place your stop so that you won't get stopped out 98% of the time before it goes to your target, okay? So that's the whole premise of that. So if I want to take a look over here, you see, it tells me if I place my stop loss about 70 pips, right, from where the dot comes in, I won't get stopped out 97% of the time. Okay, that is the power of this framework. Once you've quantified where your tops and bottoms are, and that's what the quant traders did back in the 1960s and 70s. Okay, so that's what we got over here. So all this is explained in much more detail. I don't have much time in this session, but over here it's all explained much more clearly in 7steps to ctp.com. Okay, so once you put your details in over here, hit on the green button, and I'm not a robot, then it will give you all the 7 videos over here, and you can take a look at that at your own free time, okay, on all the different stats and everything over here. Now, other than that, those of you who have looked at all of this before and you want to get these indicators onto your screen, SMR and VSA, you can go onto this page and you can go and look through it and look through this page and see how you can get the indicators onto your page. Also, another thing is our YouTube channel, right? So if you want to go revisit some of the replays and everything, why we took that particular loss or win, you know, how did it hit all the 3 targets and everything like that, go and take a look at youtube.com/master the markets. Okay, that's what you're going to be taking a look at. And in terms of our home section over here, you can see that over here, the thing that you can understand the stretch principle with is that is over here. Okay, on this videos over here, you can take a look at that, and that will explain to you, okay, after you watch through 7 steps to CTP first. Okay, so watch that, and then after that you can go and take a look at the stretch principle videos. After that, then you also got the ETM Summit, right? One more thing about the YouTube channel I did want to mention. After you hit the subscribe button, traders, you then hit the all bell icon so that you can get notifications whenever we go live, okay? Most important thing here is to understand the principles in which we are taking the trades from, okay? That's the whole important premise over here. Right, so we got that one over there. And then you also got the ETM Summit. This happens once a year, highly recommended. This time is happening in central London. We just had a small change in venue. It's still going to be in central London. It's going to be in Liverpool Street Station, okay? and it's going to be on 17 and 18 October. We had to push it just one more week after that, just because we had some schedules come in last minute, and everybody else was okay with the change date. They actually preferred it as well, all those who have already subscribed and bought their tickets. So you can still join us on the 17 and 18 October. There's also online tickets, those of you who can't make it in person. So you can do that. Those of you booked it in person, that'd be great. Over the 2 days, we're going to go through live trading, going to go through research updates as well. And also, there's going to be lunch and dinner served on the first evening as well. So a lot in store on that. And this happens once a year, and a great event for us all to re-energize and get inspired and go into the new year. Okay, so really looking forward to that one there. And if you want more information, you can always find out in the link that I gave you. Trade Nation, a quick shout out for them. They are the ones who sponsor the Telegram channel and give us the Telegram signals to give out too. So you can also do check them out over there. Okay, great traders. I think with that brings us to our topic for today. Before as I keep an eye on the gold chart over there. So let me take a look over here. Why trading different markets can boost your success, okay? Not just taking a look at just one asset class, but why looking at different markets would be a better idea. Why should that be? So you see, now taking a look at just gold. So some of you might be, some of you have told me that, you do like just trading gold only alone, right? And you don't like trading any other markets. But you see, but what's the problem with that, right? Are you just stuck trading just one market and just not seeing results, right? That's one of the reasons why we'll start the question of, should I be looking at different markets? Why should I be looking at it? Will it help me, smoothen my losses? All of those things. Now over here, sometimes, some of you might be trading a strategy and you might get 3 losses in a row or something like that, and you might get disheartened, right? Some of the people who are looking at our Telegram channel, before we used to get 7, 8 profits in a row, and suddenly then there's about 3 to 4 losses, and they sometimes they message me and they say, you know what, Tiru, is this strategy really working, what you're doing in a Telegram? First of all, before we assess any validity of a strategy, it must be very systematic and logical also, right? Remember that over here, as I said, we're not giving you the fish, we're just teaching you the principles on how to fish. Because of the limitations of time that we got, we only trade this only in the US session, only about 1 to 2 times a week. If you want to really get the validation of the strategy, you need to do it consistently over 5 times a week. And in the same hours, either the European or the US session, to really validate the strategy. And before you even start the trade in real time, do some a little bit of back testing and then forward test it as well, okay, over a proof of concept. Now, by doing all of that from before, what we have found is that diversification across different markets definitely does help, okay? Because traders, first of all, as you all know, when money is not flowing in one market, it will flow to another asset class. This is one of the reasons why diversification is very, very key. In fact, Ray Dalio, one of the biggest hedge fund traders, with $160 billion assets in management, and any other top traders, right, will always talk about diversification as only being the only free lunch that you will get. Because that's the way you smoothen the drawdown, so that, in your equity curve, you're not getting such a big drawdown, peak to valley, and you're reducing it by diversifying it across different markets. How do you prove this to yourself? Is when you even do a small sample of testing across different markets, you will start to see that your drawdown actually reduces, okay, rather than trading on just one asset class, which can also give you, sometimes, if there are black swan events on that asset class, it will really suck up a lot of your profits, okay, which is you do not want to find. Now, so diversification, remember that it can be done in different ways. The only ones that we are talking about is just different asset classes and different markets. You can also diversify using different strategies also on that particular instrument as well. Okay, so both are diversification and they help you as well. In fact, one of the guys that we interviewed on our YouTube channel, over here on the live section over here was actually Lawrence Benstock, right? And he actually trades 55 trading systems. So it tells you that, and it will explain why, you know, and he automated all of it. You can look through it over here. It will be over here somewhere. And it will be under the playlist as well, under the trader stock over here. So you can take a look over here, okay? I think we've put it over here on trader stock. I think it should be somewhere here. Can't really find it now, but there we go. Trader stock, right? So we got over here. It will be there under Lawrence Benstock under 55 trading systems. There's a lot of good material here. I just saw that live trading workshop Ninja Trader as well, so you guys can watch that as well. We got invited by them by 11 times after the first one. You know, went really very viral. Actually, 25,000 views in 1 month. We raked in on that one. So that's why they invited us quite a few times again and again. So that's that one there, traders, in terms of diversification. It definitely smoothens your drawdown in terms of when you diversify it across different markets, okay? Now, also another thing is also it will make your edge of your whole portfolio, your strategy portfolio, a bit more robust as well. That's what we found even in our live trading room when we just stopped trading just one asset class. When we started trading across many more asset classes, we saw that the edge of the system and the robustness and the drawdown also went down as well. Okay, I'll let you guys explore into all of this. I've told you all the reasons why it's good. One of the main reasons is that when one asset class is not moving, the money will flow to another asset class. Another thing also is that when one market is consolidating, another one will move, and also it helps you increase frequency as well. Okay, that's why we diversify across different markets also, traders, okay, for frequency reasons. So some markets might not be giving you a signal at that point, but another market might give you the signal, and that's when you can increase your frequency and with your strategy perspective. Now, I'm just going to, with that said, just to recap, show you the importance of diversification, also show you the disadvantages where you don't diversify as well. The main thing is to reduce your peak to valley drawdown, okay? That's the main thing we are taking a look at. And if you want to revisit this as well, as I said, go on the YouTube channel and you can click on the subscribe button and also click on the all bell icon so that whenever we go live or you want to revisit this material, you can also go on to over here as well, the live section, and go through the material that we have gone through over here, okay? In terms of the gold, if I want to just revisit that, but still, you know, traders, SMC downtrend phase 2 on the 15-minute. If it takes out this, that's a price structural break. Let me just quickly just take a look at that on the 15-minute here. That's the only thing I might take a look at because there's some volume coming back into the market. That's the only thing I might take a look at over here. And it will confirm it as well. And towards the stretch, yeah, that might do it actually. So I will take one more position here, 3759.60 on this one here. So let me see if I can get in quite quickly on this one. So market. And what I'll do also, traders, I will do this on the Telegram channel also. We'll take one more position on this because of the reversal that we just had. And let's see if we can get this on time. So low, 3759.60 is what I am taking a look at. 3759.60, okay, is what I'm taking a look at. Stop will be for 1.75 ATR, isn't it? I just need to refer back to my MAE numbers, and then we'll just do a recap, and I will manage this on the Telegram channel. Let me just see. On gold over here, we are taking a look at $7. Do we have on the 15-minute here? Yeah, I do have it. So it's either $3, so $3.50, is it? Let me see. That's on the OE. I think I do have it on the 15, MAE on the 15-minute is what it's saying. So here's 1.75 for 750. So let me take a look. Yeah, I think definitely we can use 1.75. Let me just quickly do that, traders. 4.18. Yeah, so we'll use 750 then. So from the close of this bar, what we are taking a look at over here. So over here, on the close of this bar, what we are taking a look at, if I were to do a 750 on that, let me see, 3762 minus 750. Let me just see that. 0.83, isn't it? If I were to get it coming back again, 3755.33. Yeah, so it's around here. So we are not actually getting that. So we will do for the swing high first, then we will trade it accordingly. So I will do this. So over here, has it taken out its lower stretch? Not yet, isn't it, traders? So 3759.60. Yeah. And then in terms of the stop, I'll put it here, 3772.80 to begin with. And then the limit price, we would do for 1 ATR here. So 3759.62 minus $4, 3755, right? 3755.70. So I'll do that. And then later on we can manage the swing position. So I'll keep an eye on this. Now, our whole basis of this is that as it takes out that, it will reaffirm its downtrend position and also for its volume that came over here to the downside, and then it will carry on to break the next range level over here. So that's the whole premise, what we are taking a look at, because it was a direct reversal to the short side, okay? So that's what I will take a look at. Now, in terms of the range, that will do $29. It's about there in terms of 32, or you might get caught in between. So we'll see how that one goes. 3755.70, isn't it? It's around here to give you a representative basis over there. So we'll wait and see how that goes on to be. In terms of the other ones, dollar yen, I did take a look at that. We didn't get any trade set up today. That's that one there. DAX was another one I was taking a look at. I'll keep an eye on all of this. Yes, I was taking a look at DAX just now. That was in our favor. So if you looked at the principles, I'll give you this as homework for you guys to do. If you looked at the principles of this, DAX would have also fit in well. But I just had time only to do on the goal for today. Another thing also, traders, what you can also do is we're always looking to expand the team. So those of you who've got a bit more time and understand these principles, you can take a look at this together with us and get trained on this. Do get in touch with us. I'm just taking a look at time for now. Traders, I think that's pretty much that. I'll give you all the main reference links once again. I know those are the main questions that you had. Where can I find out more about you guys and all of that? I would say the first place would be 7 steps to CTP, right? Once you've got that one there, and once you put your details in, that will give you the whole understanding of the framework what we created, okay? In terms of the 3 stats, the open equity, the MAE, and the time to, okay? And also then, how do you then put a strategy together and formulate that? So it's fully comprehensive. Highly recommend you guys to start to take a look at that in terms of the 7 steps to consistent trading performance and the smart money framework and the market structure. Now, the other thing I'll also highly encourage you guys to take a look at is the SMI and VSA page, where you can also start to look at how to get both of these indicators onto the screen. And then also our YouTube channel. As I said over here, once you've hit on the subscribe button over here, click on the all bell icon. That will give you the notifications whenever we go live online. Okay, so that one there as well. And another reference video that I gave you guys to take a look at was the stretch principle video over here. Okay, so you can start to take a look at that as well. All right, so that one there as well. And then the other thing that you can also take a look at under the live section, all the videos that we have taken from before, and you can also see all the replays from before as well. Okay, now the other thing that you can also take a look at is our summit, our annual summit on the 17th and 18th of October. As I've said before, there'll be a lot of live trading happening over here in central London. A small change in venue, Liverpool Street, is where we're going to be doing it. And also traders will be taking a look at all the research updates as well that you can use in any strategy that you're looking at. So it's very, very systematic, very quantitative as well that we'll be taking a look at. So all that, and then a quick shout out to Trade Nation, who's also going to be helping us with the venue and sponsoring the event as well. So a quick shout out to them, and you'll find out more about them on the summit as well. Okay. Traders, there's online tickets and in-person tickets as well. Those will be coming in person. There will be lunch on both days, and there will be a dinner on the first evening, where that'll be very nice for us all to catch up as well, re-energize and inspire for the new year to come ahead and towards achieving consistent trading performance. Traders, I guess that's pretty much that on me. From here, I'll be taking a look at and managing the gold trade and seeing how that goes along. And as we go throughout the day, I'll manage that on the Telegram channel. And other than that, I would say that's pretty much that from us for now. And as we always say, until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.